Pankaj, hi, good morning. How are you analyzing some of these numbers? And let me start off with Swiggy. Seems like an impressive number this quarter.
Yeah, hi, good morning. Sorry, I don't have a coverage on Swiggy or even Eternal, so won't be able to comment. But some of the numbers which I've liked is again, Ambuja is again talking of 350 rupees per ton kind of an improvement and the volume growth higher than the industry. So entire cement as a pack has been sort of coming out with better set of numbers. So we have been liking most of them. And then I think Shally again came up with very good set of numbers. So again, not really comparable from a YY basis, but if you look at the hotel piece specifically, I think you've seen a high teen kind of a growth in the revenues for hotel business. Margins have improved, so that is another. And in fact, we are liking the hotel as a pack. Overall, most of the numbers have come out quite on expected lines. In auto, we are sort of selectively positive. Maruti, again, muted set of numbers. Only reason why we are positive on Maruti is hopeful of the fact that probably the festive season, even the Maruti is also saying that they might be able to deliver better growth than the industry. So that is the only thing. Otherwise, I think Eicher Motors came out with a decent set of numbers, and they're also sort of looking at quite constructively, especially the festive season. And I think TVS also came out with a good set of numbers. So from that perspective, one needs to be very selective in the overall results. But result as a in general is lacking the spark to sort of lift the market higher, and which is why we are continuing to see consolidation in the market because of these tariff related challenges.
All right, so that's about some of the sectors and companies rather that Pankaj is liking at this point in time. But Pankaj, any take specifically on Indigo? Because the company did come out with a decent set this time around. Even the management commentary was good with respect to the expansion plans. Even just yesterday, the stock shot up more than 2%. But the news flow is around the ATF prices that has seen an uptick of 3%. How do you believe that will impact Indigo financially, and what is the stock reaction that you are expecting?
Sorry, again, I don't have a coverage on Indigo, so won't be able to comment.
All right, but Sharan, any chart check on Indigo, given the fact that the stock has seen a good uptick just yesterday? What are the levels to watch out for?
So definitely, Shrishti, I think it's one of the only few airlines that is actually gaining market share and increasing their capacity. So in fundamentally also, I think it's looking very good in terms of, I think, ETF prices, which we were asking. It is much lower compared to when crude was at $120 odd. Crude is also consolidating between then 65 to 70, so won't have a very big negative impact on ETF prices. Again, on the verge of a breakout, if it moves above 6,000, you can easily see levels of 6,200 to 6,400. Very good on the chart. Management also gave an excellent commentary. There's nothing to worry about. Good growth, gain in market share, technically moving, trading above all its moving averages. So on all fronts, I think it's a very good stock. If at all anyone has a position, do hold on to it. If anyone wants to add on to it, you can add on a buy on dip strategy around 5,600 odd levels or targets of 62 to 6,400.
Pankaj, how do you think the entire pharma piece is actually going to pan out? Question marks on pharma prices, but yes, Trump, that is, he's issued a very bold ultimatum to big pharma, saying slash US drug prices or face consequences.
So on the pharma side, I think all your global majors will have a lot more challenges, given the fact that some of them are sort of housed in Ireland, which again is a sort of a tax haven. And obviously, there's some challenges with respect to pricing also, which is what Trump is sort of highlighting also. For domestic manufacturers or even for exporters, I think largely the template seems sort of cut out. So, for example, most of the companies have started to sort of focus on the specialty side, like we have seen even in case of, say, for example, Sun Pharma also. Their global specialty sales have grown at about 17 odd percent. Domestic growth was 14 odd percent. So from that perspective, I think overall our sense is that companies have started to become selective in terms of growth, and the generic is something where we don't expect much of a pricing leeway which India can offer, and which is why we are not really too much worried from that perspective, because I think all these tariff-related noises is going to sort of continue for a good period of time, even for countries which have sort of done the trade deal. A lot of details are still not available, so you can't really sort of pencil down your numbers basis this and sort of mark down the prices. Overall sense is that Indian pharma, yes, it is exposed to US and a sizable chunk also. But our sense is that there is no major alternatives for the generic medicines like what US might be expecting. So from that perspective, yes, a knee-jerk reaction or a sentimental reaction can happen. But our sense is that we don't see a structural negative which is going to pan out in pharma overall.
Okay, not seeing a structural negative as of now for the pharma space, but Pankaj, what about the FMCG space? You know, it started out in terms of earnings rather softly, but it's been surprising last couple of days for FMCG counters like HUL, strong set of numbers from HUL. Dabur has done phenomenally well, so has Imami. So it's mostly these rural facing themes that are doing better than the urban ones right now. What's your take on the kind of demand uptake we're seeing, if at all, any green shoots on the urban front? Because that is something that we are still not seeing coming in from management commentaries.
So on the FMCG front, my sense is that they've changed the template earlier. The growth was driven by premiumization, and which is why I've seen volume growth sort of tapering off for even a big player like HUL. And as a result, the margin were on an elevated side. Now they are sort of looking to chase margins, and which is why we have seen for a company like HUL, quarter-on-quarter volume growth of volume incremental improvement of about 1%. My sense is again, given the fact that some of the global oriented sectors are expected to witness some kind of a pressure, so your FMCG becomes a sort of a better trading bet. But somehow I am not still very convinced in terms of a very high growth rate for this sector. So some total both pricing and volume growth is still going to be sort of low single digits. Or probably mid-single or slightly more higher depending on the case. But in general, this sector is not expected to outperform. Selectively, we are positive on a company like, say, Tata Consumer or Marico. I think the food segment is again expected to deliver double-digit kind of a growth, and that looks sustainable. Otherwise, one needs to be very selective in FMCG as an overall space.
Sure, be selective in FMCG right now. But let's get in some mid-cap ideas as well going on that note. Sharan, what's up?
Clearly looking to sort of do very well. Our sense is that it is very much possible that in case if the pressure comes in, probably government might come up with further more incentive. In general, our sense is that this is one segment where despite the high valuation is profitable, is the growth rate is pretty healthy. And I think they're making all the right kind of JVs and not really looking to cater the domestic demand and in fact looking to sort of cater global demand as well. Topics again is Dixon and Sirma, so we continue to sort of like, and I think we are liking this entire space within the new age companies.
All right, so that's about some of the new age counters that will be in focus. But in some of the other earnings, we also had the numbers coming in from Aarti Industries as well. Very weak set of numbers coming in. Sharan, help us with a chart check on this one for Aarti Industries, and within the same pack, if you can quickly help